All right, what's up, guys? Thursday Q&A. Appreciate everybody who posted their questions. We got a couple of good ones. So with that being said, let's get jumping in. All right, so the first question here is, when it comes to entries, I know the best entries when the stock is trading close to the moving averages between the 8 and the 21. But what if on the 1 hour chart, it is far from the moving averages, while on the 5-minute chart, it is close to the moving averages? So good question. And I think what you want to do is just simply focus on the time frame you're trading. So if you're following the rules and you're looking to build your position near the 21 EMA, say you're looking at this daily squeeze here in snow, that's the only time frame you should be focusing on. Where snow is in relation to its 21 on a 5-minute chart or a 1 hour chart doesn't really have an impact on the daily structure. And if the day chart's the one you're looking to trade, I think that's a time frame you should focus on. And then a question here about the Squeeze Pro indicator. On the Squeeze Pro colors, let's say it's in a squeeze and then you get black dots and it shifts to red. I think what you're asking here is, what are the different dots on the Squeeze Pro indicator? So you have black dots, you have red dots, you have orange, and then you have green. So the black dots is just kind of your basic average squeeze. It's not the tightest, but it's a decent consolidation. The red dots, it's a higher form of compression. So when you have red dots on the histogram, it just means we're in a bit of a tighter squeeze. And then for an example of the orange dots, if we look at Amazon weekly squeeze, this is an orange dot squeeze, which in plain English just means it's as tight as a squeeze can possibly get. It's the highest form of compression. And then lastly, the green dots is just an indication that the squeeze has fired. So we go into this squeeze and we're building up energy, and the black dots, the red dots, or the orange dots, they just tell us, how tight is that compression. The green dots are telling us the energy that was built up inside the squeeze is finally getting released, such as NVDA here. Next question, besides profit targets, do you have any other strategies for knowing when to take profits or cut losses? So in regards to taking profits, with my credit spreads, I do aim to get about 70 to 80% of the max profit. But outside of that particular profit target, usually I'm looking to take gains off the table once the stock has moved 2 to 3 ATRs away from the 21 on whatever time frame I'm trading. So for example, if we look at NVIDIA here, you have the 21 EMA, and then you have the Keltner channels measuring 2+ ATRs from the moving average. Now, right now is a good example of a bigger than average move, but more often than not, you're going to get the squeeze firing. You're going to move a good 2 to 3 ATRs, and then the move tends to run out of energy. So if you look at the market right now, I think our goal should be to build positions at the 21 and then take our profits off the table as we hit 2+ ATRs. More often than not, you're setting up for a pullback to the 21. So if you look at the market right now, we're starting to approach that territory. So I do think, with the spreads, it's nice to look for the 70, 80% of your max profit, but you do want to, think in terms of probabilities. So if you've got a position in something that's 2+ ATRs above the 21, you're just fighting that growing probability that sometime soon it has to revert back to the mean. Next question. I've seen a few of your YouTube videos. Thanks for watching. So I know you do deep out the money put credit spreads, but how do you know how far out the money to go? So for me, it's pretty simple. Once I find a setup I like, for example, snow here, good looking daily squeeze, etc. If I want to take a put credit spread, I'm simply going to try to sell the short strike as far out the money as possible while still getting a 3-to-1 risk reward ratio or better. It's pretty much as simple as that. So I'm not looking for levels of support. I'm not really considering myself with particular deltas or anything like that. Rather, how far out the money can I go while still getting at least a 3-to-1 risk reward ratio? So that's my strategy on that. Another good question here, do you take the bid-ask spread into consideration, and is there a point where the bid-ask gets too wide that you wouldn't think it's worth it? So I do take it into consideration, and I think the biggest thing when it comes to the big spread, especially if you're looking to do a put credit spread, a call credit spread, the bigger the spread, the less likely you are to collect profit quickly. So you got to take that into consideration. Say we're looking for a put credit spread here on snow, we can go 2, 3, 4 weeks out to expiration, and if there's a nasty spread on the vertical there, as long as we're getting a good risk reward, I'm okay with sitting through that temporary noise. But you at least got to understand that if there's a huge spread once you take your entry, you're not really going to collect premium until you get closer to expiration, where ultimately those options are just starting to decay in your favor. And the last question here is, given the size of your profits, do you have to take your taxes on a quarterly basis? Yes, I do. So I do pay taxes on a quarterly basis. It sucks, but it's a good problem to have. So good questions, everyone. I appreciate y'all taking the time to post those, and I'll see you next Thursday for another quick Q&A.